and I've been walking in my purpose ever since, and I've been loving it. That's just a wrap about me. Today, we also have two other nurses who are parents are going to be speaking. So our first parent that's going to be speaking is Miss Lovely Joyce. Joyce is a case manager, and she's also a lovely, amazing mother to a daughter named April, and she is beautiful, Princess April. So Joyce is out here helping single moms to build a better life and a legacy without overwhelm so they can find peace and prosper. So this is her mission, guys. She wants to leave a legacy for her daughter to make sure that while her daughter is here, she'll be able to live a good life. But even while she's away, she's able to know that her mommy loved her. So round of applause, our first speaker, Miss Joyce.
Ooh. So thank you so much, Ellen, for that wonderful introduction. Like Ellen said, I am Joyce Pollard. I am a mom of one. I've been in healthcare since 2009, and I see the lack of financial awareness. I see the lack of, financial planning. So it's like, am I going to sit back or am I going to do something about it? So I am the holistic strategist, and I am passionate about helping other single moms to build a better life and legacy without the overwhelm or overthinking, so that we can find peace and prosper, right? Financial peace and prosperity is important. So now that we talked about me, let's discuss a little bit of background information. Next slide. All right, so I don't know if you guys are like me, but I remember, growing up and being a child of a Haitian immigrant. My mom did the best that she could with what she had, right? So we never went without a meal. However, being in the magnet program at school, I would encounter those kids, right? It was those group of kids that, they dressed a little different. They was always ordering food. They drove those nice new cars. And one thing they had was money, and that money allowed them a certain amount of freedom. So I was curious as to how could they do those things, right? Attended all the school trips, never had to worry about, well, my mom has to save and put, money aside each paycheck to make it happen. It was already put in place, right? So what I did find out is that a lot of them talked about trust funds. So I was always curious as to what a trust fund actually was, and how do we create something like, why don't I have a trust fund? Because I want to be able to drive a Mercedes Benz or a brand new car instead of my, Toyota Tercel. But that's a whole nother discussion, right? But what I did learn is that there was talks of a grandfather, a great aunt, someone that was no longer alive, right? That thought about the future. So they put a plan in place so that a generation and for generations to come, the family would never be in lack. So I've always been interested in learning more and figuring something out. And now that I have a daughter that's 4 years old, I want to make sure that whether I'm here or not, like Ellen said, she knows that mommy loves her. The next slide. So now let's talk about the future, right? We talk about generational wealth, but are we doing the work? And this is not on the slide, but I'm going to add that I don't know who needs to hear this, but your kids have enough toys, right? Because I always kept saying, well, do I have enough money to, be consistent and put a plan in place? And every time I stepped on a toy around my house, every time the toys were everywhere, I kept saying, well, what if I took a little bit of the money that I was spending on these toys? What if I put that towards her future? What if, right? So will our children get it out the mud, or are they going to get it out of the garden of the seeds that we plant? Will our children get it out the mud or the garden? That is the question. So what if there was a way that no matter what, our seeds would be set up for life, right? Because I say that what God entrusts us with and what we love, we take care of. So let's get into the good stuff, the reason why we're here, the $1 million baby discussion. And back to you, Ellen.
That was a great presentation, my favorite was the quote that said, "Will our children get it out of the mud or the garden from the seeds that we plant?" Yes, because we're here to sow the seed so we can able to have the harvest, not only for us, but generations to come. Now, our next speaker is Ricardo Campbell is our next speaker. He's also a nurse too, a nurse practitioner. He has a beautiful daughter Bella. And if you ever see Bella, you know she's a ball of energy, as you can see in that picture, how beautiful she looks. So Rick is a financial strategist and a retirement planning strategist. He's out here putting millions back into community, just like me. He's here to help families and able to bring generational wealth to our community. Rick, are you here?
Good evening. Thank you, Ellen, for that wonderful introduction. Good evening, everybody. Thank you guys for being here. Thank you for taking time out of your Tuesday to be on the Zoom with us to learn about ways that you can put your family ahead, especially your children. Like Ellen says, my name is Ricardo Campbell. For those who don't know me, right, I'm a licensed financial professional. This is my beautiful wife, an amazing mother to Danielle, to our beautiful daughter, Isabella. Right. And like Ellen said, I started in the healthcare industry, right, as a nurse practitioner. And I got introduced to the financial industry by one of my great friends, right, and colleagues from college. And when he sat down with me, right, and put together a plan for my family and myself, right, I thought about it and I was like, this was amazing education, things that I did not know before, right? As I'm working, I'm trying to make sure that, my family is good. I'm setting them up for the future, but I wasn't doing it the proper way, right? And the education was so simple, right, that I thought to myself, guess what? I should be a champion, for this type of stuff, right? Because if I didn't know, right, at mid 30, well, guess what? Most of my friends who are in their 30s don't know either, right? And these were things that even my parents didn't even know as well. So that's why I decided to become a champion for this, right? So I can help everyday families build a better financial future and a better legacy, right? And our motto here is putting millions back into our community, right? So how do we do that, right? I'll tell you a little bit about our firm, right? Our firm, we have what's called a power of choice, right? Which means when we sit down with clients, these are companies that we partner with, right, to bring that financial information to you, right? And on the right side of the screen here, you guys will see these are some of the things that we help families with, right? Insurance, long-term care, but most importantly, we're going to discuss tonight college plans, right? Estate planning, right? Making sure that those things that you work so hard for, that you are able to protect those, right? Our firm, we focus on education, right? Very, very important. The education. I don't know if you guys can agree. Put a 1 in the chat if you agree that there's a serious lack of financial literacy education within our society. Put 1 in the chat. I want to see that chat blowing up, right? Lack of financial education, right? So we teach people the basic rules of money. Imagine you're playing a game and you don't know the rules. Guess what? You're always going to be outplayed, right? You're always going to be playing catch up to those who know the rules, right? So here we teach people basic information. The first rule, right, is the rule of 72. Put a 2 in the chat if you've never heard of this rule, right? The rule of 72. Look at that. Blondie, right? Mindy Pryor, right? The rule of 72 basically states, essentially, the earlier you start, the better it is, right? And not only that, as we're saving for the future, right, especially for our children, where we put that money matters, right? Where we're getting the most interest matters, because that's what's going to determine how fast our money is going to is going to grow and how fast it's going to double, essentially, right? So if you're only getting 1%, guess what? It's going to take 72 years for your money to grow and double. You think even your children have that time? Absolutely not. But if they're in areas where they're getting higher interest rates, guess what? Their money is going to double much faster over time, right? The second rule is, how does money grow? And that's very important, right? Where we put the money for it to grow, right? And there are three ways that money grows, ladies and gentlemen. You have fixed rates, right? When I sit down with families and I ask them, hey, when it comes to saving for your children's future, where are you saving? And most people say, in my bank account. I have a savings account. I have a custodial account for them. Well, guess what? In those custodial accounts, you're not getting great rates of return. So your money is not growing, right? It's just sitting there collecting dust, essentially, right? Then you have variable growth. I sit down with other families and I say, hey, where are you putting money? Where are you saving for your child's future? Right? And some of them say, hey, I'm using 529s and things like that. Well, guess what? Those things are attached to the market, and that's variable growth. That's money that's attached to the economy, right? Some people have mutual funds and things like that. Well, guess what? As the economy goes up, you're going to make money. But as the economy goes down, guess what? You're going to lose. And I was sitting down with a colleague of mine, and she was telling me, Rick, I have a friend who lost $100,000 inside of her 529 account. I'm like, what? Does it make sense that you're putting money in a place, saving for your kids' future, and when they need it the most, it could potentially evaporate? That makes no sense to me. But guess what, ladies and gentlemen? There's a third way how money grows, and that's index growth, where you're getting that market-like return, but you're locking in those gains every single time, and you're never losing. I know they say never. You're never losing, right? That's actually a thing, right? And I know they say, guess what? What you don't know won't hurt you. That's a lie, because I didn't know these things before. And guess what? They were hurting me. They were hurting my family. And guess what? They're hurting you and your family as well. Because if you don't know these things, if you don't know where to put your money to get better rates of return, and if you don't know where to put your money so you can protect it, especially for your kids, as you're preparing for their future, guess what? It's going to hurt you, right? The third rule of money, right, is taxes. Now, I don't know about you guys, but I don't like to I only want to pay my fair share of taxes. I don't like to overpay for taxes, right? And here are the different types of accounts where you're going to be taxed now or taxed later, right? Savings accounts, right? When they give you that one little interest, that 0.01 interest, guess what? They're taxing that. Some people like to buy CDs. Well, you get taxed on the growth, brokerage accounts, and so on and so forth. Tax later accounts, those are your IRAs, right? Your 529 falls under variable growth, right? But guess what? If you don't use that 529 for what it's meant to be used for, which is school, guess what? You can end up paying taxes on those. And if you pull that money out before a certain time, you can also pay taxes, right? But then you have tax advantage accounts. And look at that. Cash accumulation inside of life insurance policy, right? So our goal here at our firm is to educate people, right? Educate our families that we sit down with, right? And put them in vehicles where they're earning more interest on their money, right? They're never losing on that return, and they never have to pay taxes on those gains, right? And people say, Rick, how do I do that? Well, I'll show you. There's a short 2-minute video I'm going to play for you guys tonight, okay? Go ahead and watch this short 2-minute video. That's where the $1 Million Baby Plan comes in.
A pretty money-savvy guy once said, "Someone is sitting in the shade today because someone planted a tree a long time ago." So you're ready to start saving for your kids' future. You already understand the power of compound interest over time, so you know the sooner you start, the better. So where should you be saving that money? Let's talk about perhaps the most powerful and least known savings vehicle for kids on the market, Index Universal Life, or IUL. IUL stands out against all other savings vehicles in one main area of strength: flexibility. Other financial vehicles lock you into what you can use your savings on, but an IUL can be a first car, a college education, a down payment on a house, a wedding. IUL cash value can be used however, whenever, and on whatever you choose. Plus, since it's built on a financial chassis of life insurance, your child is instantly covered with hundreds of thousands of dollars of permanent life insurance with living benefits, simply as a side benefit of utilizing IUL as your choice of savings vehicle. Now, don't freak out. The fact that it's life insurance is actually a good thing. Life insurance cash value comes with a ton of unique side benefits, like your cash value being protected from market losses, cash value growing tax deferred and being accessible tax-free, protection from lawsuits, and IUL cash value is not considered in asset calculations when applying for student loans for college. So, what could one of these policies look like for your kiddo? Let's say you had a baby today, and to take maximum advantage of the power of compound interest over time, you immediately start socking away $100 per month into an IUL. Right away, your child is now covered with $371,000 of permanent life insurance coverage with living benefits. That's a pretty nice little side benefit. And that financial foundation you establish for them today will continue to grow with them over the years and be available throughout their lifetime for whatever they need or want to use it for. Plus, if they don't access that money, right around retirement, their IUL is conservatively projected to hit $1 million of cash value. And at age 65, they could turn on a tax-free income stream of $75,000 per year that will last them the rest of their lives, no matter how long they live. The point is, they have options. IUL is the most flexible savings vehicle for children on the market, and the best time to plant that seed is today. A pretty money-savvy guy.
Best time to plant that seed is today, right? Here's some comparisons, right? Here's some articles that were written. This is actually from the Florida Prepaid website. If you go on there, right, you can Google this stuff, right? You can go right on their website and find it out, right? As long as the money is used for education, you can make withdrawals tax-free. In contrast, IUL plans allows you to grow your savings tax-deferred, right? You can make withdrawals for anything. Education, anything. That means you aren't limited, right? Not only that, most importantly, just like the video said, right? Your 529 plans and your prepaid plans and all those other things that you have saved up for your children, guess what? Those count when you go to apply for student federal aid, right? Remember that EFC, right? I don't know about anybody, but when I saw that EFC, I was cringing. I was cringing when it came out. I'm like, oh, Lord, how's my mom going to be able to afford this? I got to take out loans, right? That expected family contribution is a killer, man. If your brother has a lemonade stand, right, and he's making 5 cents an hour, guess what? They're going to count that as part of your expected family contribution. It's crazy, right? But guess what? When your money is positioned inside one of these plans, you don't have to worry, right? You can use that money for anything. What if your child decides they don't want to go to college and they want to be a business owner or something like that, right? There's money there that they can use, right? You have unlimited amounts that you can contribute to these plans, right? You cannot lose value, right? The gains are locked in annually. There's also a death benefit that's attached. I know everybody don't want to think about death, but that's okay. It's the protection on your money. It's a protection on your life, right? As well as your child's life, right? The money can be used for any purpose when you stock it away in there, right? These accounts are lifetime accounts, right? There's no penalties to withdraw money from these accounts, right? So here are some of the top benefits of the $1 Million Baby Plan, right? College plan, flexible in the use and contribution, right? The parent can be the owner, right? You can transfer it to your child when they become an adult, right? When you feel like they're responsible, they can take over the account, you can transfer it, or you can just hold on to it forever, right? It's up to you, right? Does not count on FAFSA, right? And here's a big one, guaranteed insurability. What does that mean? The earlier you start, the better, right? I didn't have one of these plans for myself, but I started one a little later in life, right? But starting one for Bella, guess what? If anything, what does guaranteed insurability means if anything happens to your child between when you start the plan and age 40, they're guaranteed to be able to add more coverage on themselves. But the point of this plan is not used essentially for the actual coverage, it's used for the growth, right? This thing can turn into a retirement plan where you never lose value, right? And you can use it to build generational wealth. This is like the Gerber Growth Plan on steroids. Those State Farm plans don't come close to these type of stuff, right? And people say, Rick, that's all fine and dandy, but what does it look like, right, in real time? And I'll show you that, ladies and gentlemen, real quick. So here's an example of my plan that I have for Bella, right? I started off with a $200,000 in coverage, right? And then we're adding $400 a month to this plan for her, right? But in terms of its actual growth, what does that look like? What does that actually look like, right? And in the interest of time, I'm going to show you that real quick, right? So, can you guys see my screen? All right, so we started this plan for Bella when she was 2, all right? Give me 1 second here. Let me maneuver this thing. Here we go. We started this plan for Bella when she was 2 years old. For me, that's a little late. All right, I like to get on it early. So here it is, year 1, right? By the time your child reaches 18, my child, right? This is how much money she'll have. We can buy a car from that if she wants to. That's her own bank. That's her own bank, right? By the time she's 23, Viana, imagine you turn 23 and your parents hand you an account with $131,000 in it. You just graduated college. You did great. You were a great student. You did everything that you were supposed to do. And your parents handed you an account and say, hey, continue to add money to this because this is what mommy and daddy or mommy or daddy started for you while you were much younger. How would that make you feel, Diana? Come off mute. I want to hear you. I don't think Viana can find the mute button. Takia, who do we have? Who do we have?
I'll go. That would be a blessing. I would love that because I have a lot of student loans, and that would have been awesome if I had something like this.
Absolutely. Hey, I'm 36 right now. And if we scroll down, imagine my parents handed me this account when they thought I got responsible at 36. Right? $354,000 inside of that account. Right? And I know most of you are saying, oh my goodness, $400 a month, that's a lot. That's fine. You don't have to start that high. Right? That's what I wanted to do for my child. But guess what? If I fell on hard times, the flexibility of this account will allow me to reduce the amount that I can contribute to the account. Right? That's one of the many benefits of the account. Right? There's no limit to how much you can contribute based on the size of the account, right? But there's a small limit. I mean, you can always reduce. You can increase and reduce, right? That's the beauty of having these things in place. But guess what? If Bella never removed any money, or she continues to put money into this account when we hand it over to her, right? By the time she is 52 years old, she's a millionaire. By the time she's 52, just $400 a month saving, she's a millionaire, right? And if she continues to let this account stay in place, and she retires at 65, she would retire with $2.2 million. Imagine your child being able to do that. And now at this point, she can use this as a retirement account. So up here, she can use it as a college savings plan. She could buy a house, she could buy a car at any point along the way. Think about your child having these options, right? And now in retirement, they can use these accounts to supplement their retirement. She can live off of $137,000 annually, tax-free. Let me say that again, tax-free, right? For the rest of her life. And if she died at 90, she would have drawn off over $3 million and still left my future grandkids over $1.7 million. Takia, I'm picking on you again. Imagine that. Vivian, imagine that. Satira, imagine that, right? If she died at 101, she would have drawn off $4.7 million and still left her future kids, my future grandkids, when I'm gone, I'm no longer here, $500,000. That's what building generational wealth is all about, right? That's how you build generational wealth. It's not, buying this and buying that, and right? It's putting these things in place for our children while they're still alive. And the earlier you start, the better it is, right? The sooner you start, the better it is. I'm going to open the floor for some questions, but before we do that, let's talk about what we do here as well, right? Get back with the person that invited you, right? If you want some more information, run some illustration to see what it would look like for your child at their specific age, right? And based on the amount of contributions, right, that you can start putting into the plan, right? And don't think just because you can't start with a lot, just a little is enough. Because remember, you can always hand these accounts over to your child and let them continue the contributions. Because guess what? Now that mommy and daddy knows, you're going to pass down that knowledge as well. Not only you're passing down physical entity, now you're passing down something that can never be taken from them. And they're going to continue passing that same knowledge down to their kids. That's the most important entity, right? When we sit down with families, we go over what's called a personal financial analysis, and we figure out what's most important to you and your family, right? Increased cash flow, college planning, preparing for your children's future. How can we fix those gaps? Emergency funds, proper protection, protecting against loss of income. Remember, right? You are now your child's provider. What happens if something happens to you and you're not able to provide? Well, guess what? We have things that we can put into place that's going to protect your income to make sure that if something happens to you, more than your income is coming in, potentially, right? Living benefits, building wealth and outpacing inflation, reducing taxes. That's what we talked about in those plans, right? And estate planning, this is a big one. Reducing taxation and protecting those family assets that you work so hard, right, to build, right? Making sure that those assets transfer seamlessly to your children as well, right? These are important elements for when we're talking about building generational wealth. Because if we're not transferring these assets seamlessly, guess what? Who's getting a cut? The government is continuously going to eat away at that, right? So, ladies and gentlemen, thank you so much for being on here. I'm going to open the floor up for any questions. Any questions? You guys can come off mute or type a question in the chat. Can I have somebody monitor some questions in the chat for me, please? I would appreciate that. Thank you so much.